we've just come out of this really interesting bank earnings cycle where we've seen pretty robust numbers. Everything looks fairly rosy. As an activist, do you look at that and say, we need some dysfunction here? We actually need something to go wrong so we can make a case to change?
I don't think you need something to go wrong. I mean, I think what happened in this earnings cycle and what you've seen over time is it's really tough for banks out there who are dependent on spread income to really move the needle. I mean, I think banks have done well, but it's been a grind. It's certainly difficult for banks who were struggling, in a rising rate environment to keep deposit costs low. Now they're struggling to get those deposits to price lower as their asset yields start to drop. I think what's going to happen and what you've seen, in a very significant way over the past 6 to 9 months is more MOEs among regional banks who just decide, look, let's pair up. There's a deal announced today, South Street and Center State, and they're taking 10% of the combined company's, non-interest expense out off the top. So that's a tremendous way to create value.
And as you say, we've seen a lot of MOEs, we've seen a lot of M&A generally in banking. I think last year was something of a record. Is this just banks and the CEOs, the boards, the shareholders are all rushing to get stuff done before we go into a presidential election that could make it incredibly difficult for any kind of bank growth?
I don't know that they're rushing to get it done. I mean, certainly the presidential election is a consideration. The adoption of CECL is another consideration where the accounting for reserves is going to change completely. I don't think anybody who's a bank CEO, director, investment banker has a crystal ball and can tell what's going to happen with the election. It's a consideration, but I don't think it's something that's a driving force right now.
Now, one way you guys are public at the moment is Community Bankers Trust. You've disclosed a position in there recently. Now, they had a call on Friday with investors where they said, quite interestingly, that the company has engaged or is having discussions augmented through investment bankers. It was very foggy language. Is your understanding at the moment that this company is being sold?
I don't know. I mean, first of all, I'd say it was a call to investors, not with investors, since they didn't take any questions. They made a very vague statement.
Well, you're an activist. You're supposed to ask the questions.
Well, there were no questions taken, so there wasn't that opportunity. And we don't want to play gotcha with these guys on their earnings calls because research analysts want to get their questions in. But they made a very odd statement about engagements with respected investment bankers, and I sent an email to the general counsel being like, what does this mean? Does it mean you've hired investment bankers? If so, what are they doing? And if not, does it just mean you're kind of like talking to any investment banker who happens to come your way? It's just a very unclear statement that they made.
Did they respond?
There's been no response yet. I mean, engagement as somebody who is an investment banker who's always like, I got to get engaged. I mean, that's the word you use. When you see that as applied to investment bankers, you think somebody's been hired. What the case is here, I don't know. I mean, I think it's something that they probably want to clarify.
So what's the next move for Driver? Do you try and unseat the board? Do you try and push for change some other way?
Look, I mean, we put out a letter to other shareholders after talking to the company, to the board, to the CEO, rather extensively last fall. I think the ball's in their court right now to try and show that, a standalone path or this is not the right time to sell, to make that case to investors. I don't know that they've done it. I don't know what their plans are to do it. We've certainly gotten a lot of feedback from investors saying, hey, we support what you're doing. We agree with you 100%. We're totally in line with your views on this. And we'll see how things play out. I mean, they have an annual meeting coming up. Obviously, that's a time when investors can kind of voice their sentiment. So, we got a few months to figure out how we'll sort of position into that and what happens in between.
Just talk to me a little bit about election risk, because one of the big themes we see in activism at the moment is people really protecting on the downside, investing heavily in stocks that have a good dividend, for instance. If you invest in banking at the moment, even if you have a great thesis, if we end up with a Warren or a Sanders presidency, couldn't you just see a lot of value destruction for your investment, even, as I say, if you have a great idea of what the bank should be doing?
Look, I don't think it's, I'm not telling any secrets that would not be good for the banking industry. Under Trump, we're talking about MOEs. I mean, one of the things that's happened is that the level or the threshold for being a SIFI has gone up from 50 to 100, and it's going to 250, which is allowing all these deals to happen. You've had a complete overhaul in the personnel at the Fed, overseeing bank M&A. the regulatory approval process, and things are going much smoother, and you're seeing the kind of the needed consolidation happens. Elizabeth Warren is, on record is that she doesn't understand why bank mergers aren't getting approved. So I think she's just dying to keep one from getting approved. I don't know why. So it's clearly going to be a different scenario. But at the end of the day, look, you're still going to have 5,000 odd banks in the U.S. They're still going to have shareholders. They're still going to have to try and find a way to create value. And look, there's plenty of other industries who might be higher on the chopping block for her. Google, those types of guys. So probably not good, but it's not a death knell by any sense.
And if we've learned anything about antitrust in this administration, it's that it's highly unpredictable.
Right.